Welcome to the latest Motley Fool Scoreboard. I'm on in Chocobaloo. We've got longtime fools Dan Kaplinger and Jason Hall giving a 1 to 10 rating to institution-level food distributor and Moneyball rec, Sysco, ticker symbol SYY. First, we'll rate the strength of Sysco's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you have 9, Stan.
Who would have thought it? But food service is a great business to be in, and Sysco has a commanding market share lead in that business. It's food distribution to restaurants as well as other eating establishments. Think places like when you buy concessions at an entertainment venue, your kids at a college dining hall, somebody's in the hospital having food at the cafeteria there. Sysco, the company that's delivering the food to all of those places. And in addition to being a market leader in the U.S., they've also built up a growing presence abroad. Sysco, you might be surprised. I mean, food might seem as far away from technology as you can think of, but Sysco's done a really good job of using innovation in technology to improve its business and cement its leadership position in its industry.
Massive consolidator, roll-up expert, and I think it still has tailwinds. Dan mentioned the international opportunity, but I think we continue to see the trend of people outsourcing food and less cooking at home, and I think those are going to be good. And I think you look at the pandemic, and obviously that was a brutal period, but generally it's a really less cyclical business than you might think.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you agree at 7, Stan.
Yeah, I'm giving CEO Kevin Hurricane a 7. He rose to the top management spot. Really tough timing came in February 2020 at the beginning of the COVID-19 pandemic. But he brought past experience from CVS Health to the table, which might not seem like the best match. But CVS taught Hurricane a lot about sales, supply chain logistics, operations, and also gave him kind of a taste of the digital technologies that he needed to integrate in order to make Sysco, kind of pull Sysco into the 21st century fully.
He was named executive chairman last year, and a lot of people don't love that consolidated leadership, chairman and CEO. He was the CEO and a director for 4 years before that, as Dan was talking about. And I think the only ding that I really have here, earnings have recovered from the brutal lockdown period during the pandemic. But if we go back to 2019, earnings per share is only up about 30%. The stock has also underperformed. Sure, you want to give credit. The market's been incredible. So do you really fully beat them up for an underperforming stock for this kind of business? But annualized returns, the stock's less than 7% since 2019. That's okay, but that's well under the market's long-term returns. And if we're buying stocks, we need to have a good reason. That's usually outperformance. And he hasn't delivered that during his tenure with the company.
So CVS customer myself, I don't think CVS has messed with the digital technologies since he left. For financials, a 10 is a fortress, a 1 is yikes. Both of you have 7, Stan.
Yeah, I think Sysco's delivered pretty solid long-term performance, but the growth is really modest. The margins just razor thin in this business. I mean, people are familiar with grocery store margins, aren't going to be surprised at just how thin these margins are, and so that holds me back to 7.
Yeah, I think the thing that they do well is they leverage their cost advantages. They are a massive buyer, and they use those cost advantages to lock out competitors. The balance sheet is fine, but there's a significant amount of the debt that's on there that is lower than the rates that they're going to have to refinance it at going forward. Even with rates coming down, debt's back below the pandemic peak. But after a couple of years of declining, it started to inch higher every year for the past 3 years. So those are things that I don't love about the balance sheet side of the financials.
Jason, let's move on to valuation. How well will Sysco's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, I think I've already telegraphed my expectations here. 5 to 10% in returns, probably going to underperform the market. Safety score 7. It's on the higher end, but again, I've talked about my worries with debt. I don't think this is a stock that's going to either beat the market or blow up your portfolio. maybe put it in the better than a bond bucket in terms of total returns for investors. Maybe your goal at this point with part of your portfolio is not to beat the market. You just want something that's going to do better than bonds. It's going to lower the risk profile in your portfolio and something you can hold through market conditions. Maybe it fits that need, but I don't think it's a stock that I would want to own.
I'm mostly with Jason here. 5 to 10% returns in line with market performance, but a safety score of 8. The stock has underperformed. That builds in a bit of a margin of safety there, and I like the 2.5% dividend as well. Just don't expect huge growth from the company. That's not the nature of the industry at this point.
Thank you to both Dan and to Jason. They've given Sysco a strong overall score of 7.1 out of 10, with 9s for the underlying business. Perhaps a radar stock if things dip. I asked both Jason and Dan if there was a topic for them. Dan's a no. Jason goes with Cintas, ticker symbol CTAS, so maybe check that out. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Texas Pacific Land Corporation. Till then, Fool on.